Hey, another video more. In this video, I'm gonna explain how to trade bearish engulfing when the price is going down. The price open right here with this green candle, and right here we have a clear resistance level. Yes, above the resistance level, it is the new all-time high 667.34 cents. But more importantly, let me show you body price in the pre-market. In the pre-market, as you can see, the price was sideways for many hours, and from here, the price was sideways. Yeah, post-market and pre-market, the price was oscillating in the same range. Wait one moment. When the price make a breakdown, it's a clear entry in input because the price was oscillating in the wide range, and right here, let me remove this. This is a clear bearish engulfing. This candle right here, this candle, it is a clear bearish engulfing because involve the previous candle, and right here, it is a this candle is the first bearish engulfing. Yeah. However, this candle is more effective because this candle with this weak rejection above, this candle means the seller took the control of this position. It is entering put stop loss above right here, just right here, because if the price goes up, hit our stop loss, it's okay to lose a little bit money instead of to lose a lot of money. Let me show you. This is another bearish engulfing because as you can see on my screen, this red candle involved the previous candle completely. Is another entry input and stop loss above, just above, to avoid catastrophe because if the price goes up, will be protected with our stop loss between 4 or 6 red candle in row. It is exit and always take profit. I got it in this candle input, stop loss above 1, 2, 3, 4, 5 right here. I took my profit right here with 6 red candle. On the other hand, the price kept going down. That is okay. The more important in this trade is to take profit and put your profit in your account. This way, you're gonna increase your trading account. The price continue going down. Yes. With this green candle, I make a mistake because It's not a mistake. It's part of the trading because in this business we can make money, also we can lose money. Make sure when you lose money, be a little bit money. I got in call, my stop loss right here. I was waiting for 4 or 5 green candle. However, from here the price changed its direction with two red candle. I obliged to abandon the position call. Yes, I got in call with two red candle. I obliged to abandon my position in call because remember, rule number 1 is cut losses quickly. The way you wanna avoid catastrophe in your account. The price was oscillating, and from here, three solid, three solid red candle, as you can see, three solid red candle. Now, visually, the price dropped down, but right here, we can take a decision: enter input or wait. But remember, today the price was going down, and yesterday the price was going up without stop. Yesterday was a green day, and today the seller took the control of the position input. So right here, with three solid red candle, we must ask ourselves, what could I do in this trade? The best way it is, remember, no risk, no reward. It is enter input, stop loss. In this case, in this only particular case, the stop loss not right here. In this particular case, remember, listen my word. In this particular case, stop loss right here. It is a little bit far for the reason I said in this particular trade, the stop loss right here. Remember, I will say our exit will be between 4 or 6 red candle in row. Remember, we enter right here, stop loss above. Let's count together. 1, 2, 3, 4. Between 4 or 6 red candle, it is exit. Once one green candle appeared, we must oblige to abandon the position input. Right here, 4 green candle, 5 green candle, 6 green candle. That enough because below it is the support. There is, remember, right here. Yesterday the price opened right here. Let me make it more bigger. Yesterday the price opened right here, and today the price hit the support. It is exit. Let me show you another mistake that I made today. The price hit the support, sorry, with this green solid red candle. I got it in call because the price already fall down with 7 red candle. I got in call with this green candle. My stop loss above the support. Let me show you something very important. If the price is not going up, when you see 2 red candle right here, 1 red candle and 2 red candle, cut losses quickly, cut losses quickly, cut losses quickly, because 2 red candle, I'm obliged to abandon the position right here. 1 red candle, 2 red candle. Don't wait to the price hit your stop loss. Be meticulous doing the trading. This way, you're gonna survive in this privileged business. Yes, I got in call thinking that the price it was going up with 4 or 5 green candles to take my profit. Like I said, in the market, anything can happen at any time. And just thinking that the price it was going up, you're right. And just thinking that the price it was going down, you're right as well. This is my analysis for today, Tuesday, September 23 in the SPY 500. Today, there were many entries in short for Bearish engulfing. And before I wrap up this video, take a screenshot to this candle. Take a screen. This candle right here. This candle. Take a screenshot because this candle with a weak rejection above this bar involve the previous candle. This candle it is very effective to enter input because I seen many times when this candle appear, it has 90% of the price got down, and today it was an exception. The price down. Thanks for watching.